More and more of my clients are selling their investment properties in California and 1031 exchanging into Nevada. Why? It's not just about taxes, it's about cash flow, long-term stability, and one reason that most people aren't even aware of. Probably the most important reason to consider exchanging your properties in California for Nevada. Landlord-friendly laws. Nevada is simply more landlord-friendly. We have fewer rental laws, tenant restrictions, and a faster court process approval if problems do arise. That means investors can actually protect their cash flow and their property rights. In California, the trend is actually going the opposite direction. There's more tenant-friendly laws, longer eviction processes, and more liability for landlords. So for my investors that are tired of navigating all this red tape, Nevada just makes more sense. Better cap rate and cash flow. In California, especially around areas like LA, the Bay Area, or Orange County, your cap rates are looking around 3 to 4%. In Henderson and Las Vegas, you can still find cap rates that are hovering around 5 to 7%. That means my clients are trading in one high equity, low yield property in California for multiple high yield properties in the state of Nevada. And they love that many of these are brand new construction, way more energy efficient and less maintenance, so they're trading in their 1900 buildings for something a little bit newer. Lower property taxes and operating costs. Nevada's property taxes are roughly about half of what California's is. So for our property taxes, we're usually looking about 0.5 to 0.7%, and in California, you're looking closer to 1 to 1.25. And that's not including insurance premiums too. For context, homeowners insurance premiums are on the rise across the nation. However, in California, it rose about 21% in 2025, as opposed to Nevada, which rose about 7% in the same year. California's FAIR Plan, the state insurer of last resort, costs roughly $3,000 to $5,000 per year, and in high wildfire zones, think Sierra foothills, Malibu, Santa Rosa's, policies can easily exceed $8,000 to $10,000 annually. All this adds up to Nevada having higher net operating income and fewer regulatory headaches for investors. Population growth and economic expansion. Southern Nevada, especially Las Vegas and Henderson, have seen a steady incline in population growth. It's really driven by the low cost of living, an influx of California residents, and a strong, diverse job market in tech, logistics, and entertainment. Nevada was ranked one of the fastest growing states in 2024, which investors love because it shows long-term stability and housing demands in this market. Estate and legacy planning, Nevada's asset protection advantage. Here is one that most people don't think about or aren't even aware of. Nevada has stronger asset protection programs, and it's not necessarily the home being in Nevada, but sort of the laws and structures around holding title in Nevada that makes it significantly more advantageous. Nevada has some of the strongest charging orders protection in the country. If you own property through a Nevada LLC and you get sued personally, a creditor can't just take your property or force a sale. They may only intercept distributions. California doesn't offer the same protections. Creditors can go after the LLC interests directly. Nevada also allows self-settled asset protection trusts, which allows you to shield your assets while still benefiting from them. Of course, this isn't legal advice, so always consult with a Nevada lawyer for your specific situation. So when you combine all these factors, it's an easy choice to see why so many investors are choosing to 1031 exchange their properties into Nevada. If you're considering doing the same or just want to explore your options, I love to help. I'm Shawna, the investor specialist at the Thomas Group. You can find all my information down below. I'll be at extension 9, and I'll see you in the next video.